Okay, so December 2013, question 3C. December 2013, question 3C. Yes, today you can see that. So it says that CTM Limited buys and sells a single product branded SN. The demand and lead time of product SN is not constant. The following probability distribution has been provided. So we are given that. Then the order point for product SN has been set at. So hiyo maneno yote tumepewa, and then we are told to simulate. So when you are told to simulate, the very first thing is to come up with the Monte Carlos. So let's do the Monte Carlo for demand. Monte Carlo for demand. So the Monte Carlo for demand, we will have units, we have the probability, we have the cumulative probe, and then we have the range, then we have the range, so the units are 0 to 12, 0, 2, 4, 6, 8, 10, 12. So the probabilities are 0.02, 0.08, 0.22, 0.34, 0.18, 0.09, and 0.07. So to cumulate, this will be 0.02 followed by 0.10, 0.32, 0.66, 0.84, 0.93, and 1. Now to get the ranges, you check how many decimals we have here. So the decimals are 2. So to remove the decimals, you must multiply by 100. And 100 has 2 zeros. So that means you start, or you'll be having digits with 2, or rather random numbers with 2 digits, and you start at 0, 0. So you start at 0, 0 to stop at this whole number as you multiply by 100, which is 2 now, less 1. So when you less 1, it is 0, 1. Then you pick from 0, 1, you go to 0, 2 to stop at this number, whole number less 1, that would be 0, 9. The next is 10, all the way to this one, which is that 1. That is 1, that 2 less 1. Then the next one is that 2 to go to this less 1, 65. 65, we go to 66. Then you go all the way to 83. Then from 83, you go to 84 up to 92. then 93 up to 99, up to 99. Then from there now, we do the Monte Carlo for read time. Monte Carlo for read time. So we have the Monte Carlo for read time. The Monte Carlo for read time. So this one, we have the units, not units. The read time is expressed in terms of weeks. So I will talk of weeks. Then we have the probe, then cumulative probe, and then the range. So the read time is going from 1, 2, 3, 4, 5. And then we have 0.23, 0.45, 0.17, 0.09, and 0.06. So when you cumulate, this becomes 0.23, 0.68, 0.85, 0.94, and 1. And going by the same style for the range, this becomes 0, 0 to 24. Sorry, doing the reverse. Up to 22, then 23 up to 67, 68 up to 84, 85 up to 93, then 94 up to 99. Okay, so I think your space, Tosha. So we are drawing the simulation sheets. I start from the reverse so that you get confused. No. So that you get to know it has how many colors. So obviously we are told to run in terms of weeks, so in terms of what? So we have week number, we have week number, then we have opening stock, then we have demand, we have random number, and then units, random number and units. Then we have units here. We have those which are sold. And then we have the shortage. We have units which are sold, and then the shortage. Then that will give us someone known as closing stock. Closing stock. When you say closing stock, you ask whether you order we say yes or no. Order, if you say yes or no, then you will have the time. So read time. We will have random number and then weeks. Then costs, we will have holding. Or I can start with shortage, there will be 4 row. We'll have shortage. Then I will have holding. Then I will have ordering. And then I will have total. So for you, you don't have to draw. Yeah, I'm already keeping myself busy. The week is finished. And also because my book is not ruled. Your book is ruled. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Then we will have total and average. Total and average. Those who are online, once you finish, you write the word finished. You write the word finished so that I know we have finished and we proceed. Once you are finished, you write the word finished. Hey, at already two have finished. The others can be joining us. Eh? Good. Yeah, that's a good number. We can be proceeding. So according to information number what? Number 1, number 5, the opening stock is how many units? 40. So you record 40 here. Then you take the first random number. The question has not specified which random numbers are for lead time and demand. So you just take them as presented. So the first random number is what? 68. So you come to the Monte Carlo for demand, 68 copper. That gives us how many units? 8. So how many units do we sell? 8. You have 8. You have 40 units. 8 customers have come. So you sell 8. How many customers go home without? 0. So you close the day with how many? That's 2. Do you place an order? No. The order point is according to information 1 is set at 30. So we are not yet. So that means no. And therefore there is nothing in the lead time when you say no. The shortage cost is therefore 0. But now the holding will be, according to information 2, is 20 shillings. So take 20 times the closing, 640. There is no ordering, so the total cost is 640. The total cost is 640. Then we go to day number 2 or week number 2, where we are opening with what? That 2. The next random number is 52. So 52 gives us how many units? 6. So how many do you say? 6. Shortage? 0. Closing stock? 26. Do you place the order? No. You have forgotten. I told you don't make orders at night. Because it is in the evening when you have closed that you get to know your closing stock. So orders are made the following day or the following week. So we go to bed knowing that we are supposed to make orders the first thing next day. So when you say no, nothing here. So no shortage costs. So holding cost will be 26 times 20. That gives us what? 5. 20. No ordering. So we close with 520. Next week, we open now with 26. Random number is 50. So 50 will give us how many? 6. We're going to check information 2. It says the holding cost is 20 shillings per unit. So we are multiplying by 20. Check that. So how many units do you sell? 6. So shortage is 0. So the closing stock is what? 20. Do you place the order? Yes. Tony, have you seen that? When you say yes, now take the first random number. It is 90. So 90 kibia kwa lead time, it is going to be how many days? 4. It's going to be 4. What you are saying is not true, Mudoni, but what I have done is the way it should be done. The way it should be done, you're supposed to multiply by the unit that it grows with. Take it that way. Okay, so when you get a read time of 4, you mark when those goods will be received. And I told you, you count like this: 1, 2, 3, 4. The 4 weeks must lapse. So those goods will be received on Monday morning of week 7. On week 7. Today, you are saying lead time is 5. At 90, is that 5? No. It is 4. Check your Monte Carlo. 90 is here, between 85 and 93. So you see that, let me know. So we don't have a shortage. So the holding cost, I'm saying you take these units, the closing times the 20. Yeah, good. So that gives us what? 400. Now we have made an order. And according to information, what? Information 3. The cost of placing an order is 250. So you bring 250 here. When you add now, you have 650. We got week number 4. Week number 4, we are opening with what? With 20. Yeah? So when you open with 20, the random number is what? 59. So how many units? 6. So how many do we say? 6. Shortage? 0. Closing is 14. You place an order? No. So nothing in the lead time. The shortage is 0. So holding cost would be what? 3, 280. No ordering costs. And then we have 280. Week number 5, we open with what? 14. Random number is 08. So 08 gives us how many units? 2. Then we have how do you calculate opening stock? Opening stock is the closing stock. The closing stock here becomes the opening stock the following day. And the first one was given in the question. The closing stock becomes the opening stock the following day. That okay, Winfred? Tulikuwa tunauliza how many units do we sell? 2. So no shortage. Closing stock now will be what? 12. We place an order? No. The lead time is what? 0 here. Rather, there is nothing there. Shortage, we don't have any. So the holding will be 12 times 20, 240. No ordering, so we have 240. We have 240. The next thing is week number 6. The closing stock of number 5 becomes the opening of number 6, which is going to be 12. But only we are not placing an order because we are waiting for the order we placed first. Until we confirm it is not being delivered, that's when we place another order. So we are waiting until day 7. So you don't keep on placing orders here. Once you place one, you wait until the day that they told you to place. I mean, it will come. Good. Sasa, the random number 70, 72. So 72 will give us how many units? 8. So we sell how many? 8. So the shortage is what? 0. Mudhoni, have you understood that? Closing stock is what? 4. So do we place the order? No, we are still waiting on the one that we had placed earlier. No shortage. The holding now will be 4 times 20, that is 80. No ordering, we have 80. No ordering, we have 80. The next one, when you go to the hotel, Mugondi, you don't send every waiter who comes your way. You wait until you confirm that the one you had sent is not delivered. But until then, you keep on waiting. So that is what is guiding us to wait until week 7. And what made us to say week 7 is that we counted these 4. We counted from here 1, 2, 3, 4. So we are waiting to receive the goods on week 7. So it is only if they have not brought after week 7 that you can think of placing another order. That okay now? Week 7 now. Good. Week 7, we are opening with what? 4. But it is the week we are also receiving our new batch, which is coming with how many units? 40, according to information 1. So we open with 4, and it is the week we are also receiving the 40. So random number now is 44. 44. So 44 will give us how many units? 6. So how many do we sell? 6. Shortage is 0. Then 38. 38. Do we place the order? No. The random number, nothing there for the real time. So we are going to have a shortage of 0. And a holding cost of how much? 760. And then the ordering is 0. Then we have 760. We have 760. Week 8, the closing of week 7 becomes the opening of week 8, which is 38. Random number. 95. So 95 will qualify how many units? 12. So how many do we sell? 12. Shortage is 0. The closing is what? 26. Do we place an order? No. We have gone below the point, but we will place the following week. That thing you must get to understand it, Kamisa. So nothing in the lead time. So no shortage costs. The holding is 26 times 20. That gives you what? 520. Ordering is 0. So total is 520. Week 9. We open now with 20 what? 26. Random number is 85. So 85 gives us how many units? 10. So how many do we sell? 10. What is the shortage? 0. Then what is the closing stock? 16. So do you make an order? Yes. It's time now to place the order. Ready time is, give me now the random number for ready time. 81. So 81 will give us how many weeks? 3 weeks. Give us 3 weeks. So I've said once you know how many weeks, you count from where you have said yes. So we count like this: 1, 2, 3. So those goods will be received on Monday of week 12. You count that way: 1, 2, 3. They will be received on Monday of week 12. So as you wait for that order to be delivered, you proceed. No one has missed, so you don't have a shortage. The holding is 16 times 20, 320. Huyo mwingine 250, so that the total is 570. 570. Haya, week 10 tunafungua na how many? 16. Random number 90, 93. So 93 will give us how many units? 12. Okay, so 12. We sell how many? 12. Shortage is 0. So we close the day with what? 4. And then do we make an order? No. So there is nothing in the ready time. Nothing in the ready time. No shortage. So the holding will be what? 80. No ordering. So the total is 8 there. Higher. After that, week 11, we open with what? 4. The random number is 28. So 28 gives us how many units? 4. Can you adjust it to 78? Because in a car is why you have a shortage. What adjust for 78? But for exam, you don't adjust. Exam, you just need the way it's presented. But I think I need to show you how to handle shortages. So if you make it to be 78, even in your question paper, make it to be 78. If it is 78, now give me the number, the units. 8. So if you have a demand of 8, how many do you sell now? 4. So that you have a shortage of 4. That have a shortage of 4. Closing stock now is what? 0. There are some people who write negative. Can't have negatives. So do you place an order? Yeah? No. So nothing in the ready time. So the shortage now is 4 units. Each one is costing us what? According to information 4. 150, yeah? Yeah, so 150 times 4 is what? 600. We don't have holding, we don't have ordering, so the total is 600. Next now is week 12, when we are receiving our order of how many units? 40. We are receiving our order of 40 units. So the random number is 89. So 89, how many units? 10. So how many do we sell? 10. Shortage is 0. So the closing stock is, do we place an order? No. So nothing in the lead time. And shortage is 0. But the holding now is what? 600. 600. The ordering is 0, and we have 600 there. Week number 13. We are opening with what? 30. Random number 15. That qualifies how many units? 4. We sell 4. A shortage of 0. So the closing is 26. Do we place an order? Yes. Yes. Very good. Yes, because the terms are at. You see it is saying at. At that. Yeah. Lakini kama ingekuwa inasema below 30, then you would not place an order here. It will be the following day. Because this is now the first time you are below 30. Yeah. But the term, the word used here is at. Good. So having said that, give me now the first random, the next random number for lead time. 60. So that gives us 3, yeah? 2 weeks. 2 weeks. So come on, 2 weeks. Unahesabu again. That is 1, 2. So they will be received on week what? 15, which is not part of our sheet. So shortage is 0. Holding is what? 520. There is ordering of 2. So we have 770. Week number 14. Sasa tunafungua na ngapi? 26. Random number 03. So 03 is giving us how many units? 2. So we sell how many? 2. Shortage is 0. And the closing is 24. So do we place an order? No. So nothing in the ready time. Shortage is 0. Na huyo mwingine anaitwa holding ngapi? 480. So ordering is 0 and sasa hii ni 480. So get the total of this total cost and you divide by 14.
Yes, 67.
So we are through with that. We are okay. Okay. So it looks like some of us are still not very comfortable with that area. And, what you need to do is just go and practice the question. As I told you the other day, ufunge kitabu, ujifanyie sasa. Ujifanyie mpaka you go all the way to the end. Then from there now you can do another one. Like the one that we did in class. It will help you. So the next question that I want to solve is May 2015, question 5A. Was it solved in class? No. Okay, read through and tell me where it belongs. Read through. 1 minute. So unaona kama ni which area? It is inventory, eh? Specifically what we call multiple discounts. Yeah. Multiple discounts. So in that, you have first of all to get Q. We know that Q is given as 2RS. You divide by H. Divide by H. Get the square root. So our R is the annual demand. Annual demand is what? Annual demand is how many units? 12,000 units. Eh? Now, this 12,000 is for the product that is made. And we are told we require 0.4 kilos of the raw materials. So you must multiply by 0.4. And then we are told that there will be a loss of 20%. And I told you when you get a loss, you have to factor 100% by simply dividing using what remains. See, like what you are doing the other day for variances. Instead of 35, you are dividing by 32. Very important. That gives us 6,000. The other thing is the ordering costs. That is S. The ordering costs, we are going to get it from additional information 1 says the cost of placing and ordering each order is 90, of which 40 is an apportionment of costs which are not expected to be affected in the short term by the number of orders placed. So we say S is the incremental cost. So we will have 90, you less 40. So we are going to work with what? 50. We're going to work with 50. Next is the annual holding costs is 90, of which only shillings 40 is expected to be affected in the short term. So H is we are told 90 and only 40 is expected to be affected. So the variable is 40. That is the one that we should take. That's the one that you should take. I told you that if H is not changing as C changes. You see, C is changing. We have various prices. The cost per H is. So H is not affected by that. We are given a single figure. So you just compute one value and it will apply in all the breaks. To apply in all the breaks. So if that is true, let's get the EOQ. The EOQ is 2 times 6,000 times 50. You divide by 40. You divide by 40, then you get the square root of that. The square root of that. You give me the units. What do you mean by that? What? Specify. I have said very many things. Specify exactly what I mean, what I have said. On holding cost, what I mean is that ordinarily we know H is supposed to be greater than or equal to CI. And if you look at the question that we solved in class, H was changing as C was changing. But if H is not changing, I told you Q will remain. And I think I gave you an assignment. I don't know whether you did or you did not, which is a case like this one. Yeah. Which I told you that H is not changing. I gave you an assignment, you can confirm. So I hope now you have understood what I'm saying. Good, good. Did you do the assignment? Give me the answer. Huh? So 123, yeah? Yeah, 123 units. Now, if we have 123, you can see it is below every break, because the lowest break is 1,000. The lowest number of units you can buy. Yes. So 123, it is below everyone. We said that when you compute this, there are 3 possibilities. You will either get it above. If it is above, you ignore. Or you get it within. If it is within, you work with the computed EOQ. And the other one is below. If it is below, you work with the lower limit. Work with the lower limit. So now that this one is below everyone, we are just then going to work with these values that are given there. Looking at me as if I'm talking Greek. These are things I've taught you and they are in the notes. Now that this one is below everyone, because the lowest, the question says, purchases can be made in multiples of 500, with the minimum purchase order quantity being what? The minimum order quantity being what? 1,000. So 123 is below all what you can buy. So I'm saying now that our computed EOQ has been found below, the policy says you work with the lower limit. So these values that we are given here, they are lower limits. So those are the ones that we are going to work with. So make a statement there so that it represents the other steps. That the computed EOQ is below the computed EOQ of 123. Put it that way. The computed EOQ of 123 units is below all the price breaks. Is below all the price breaks. It's below all the price breaks. And therefore, the lower limits, of the breaks will be used as Q. The lower limits of the breaks will be used as Q. So now tutengeneze hii table. And the table will have the order quantity and the order quantity is our Q. Then we will have cost per kg. Cost per kg. And remember, this is our C. Then from there now we compute the total costs. And therefore the lower limit of the break will be used as Q. The lower limit of the break will be used as Q. You got that? The lower limit used as Q. So now we want to get the total cost, which is given as R times C plus R out of Q times S plus Q out of 2 times H. That gives us what we call total cost. How many have you gotten that? Okay, good. So we start with the first one, 1,000. 1,000, the price is 100. So our R, we know it is 6,000. So 6,000 times C, 100, plus 6,000. You divide by Q. Q is 1,000. Multiplied by S. S, we had agreed it is what? 50. Plus 1,000. You divide by 2. Multiplied by H. H we had gotten is what? 40. So work out that and read the answer. $620,300. We go to the next one, 1,500. The price is 98. So again, 6,000 times 98 plus 6,000 you divide by 1,500. multiplied by 50 plus 1500 you divide by 2 multiplied by 40. Six 18 200. 618 200. The next level is 2000 at a price of 96.5. So this is 6,000 times 96.5 plus 6,000 you divide by 2,000 multiply by 50 plus 2,000 you divide by 2 multiply by 40. Six 150. The next is 2,500 at 95. So 6,000 times 95 plus 6,000 you divide by 2,500 multiplied by 50 plus 2,500 divided by 2 multiplied by 40. Hmm? 620, 120. The last one is 3,000 at a price of 94. So it is 6,000 times 94 plus 6,000 you divide by 3,000 times 50 plus 3,000 you divide by 2 times 40. $624, 100. So you select the cheaper one. So the cheaper one is what? 618, 200. So with 618, 200, you recommend that they should buy 1,500 at 98 shillings. So the optimal order size is 1,500 units. Optimal order size is 1,500 units.
Suppose we have the UQ was 1,100 and the rest is also given us. Is it related to you can be using the 1,100 as Q4 rates.
1,100 for all the breaks? No. The application is break specific. The application is break specific, meaning if you are to put these in breaks, this means it is 1,000 up to 1499. That's where this price applies. The next one is 1,500 up to 1999. That's where this one applies. So if you got 1,100 as the Q, 1,100 is within here. So according to the general rule, your Q now, when you are in this break, when you are here, you should use Q as 11 what? 100. But sasa ukikuja hapa, if Q is still remaining constant, this 1,100 will be below this. So you are going now to use Q as what? 1,500. Where are you? However, this question has some further instructions that violate that rule. And the instructions are, you can only order in multiples of what? 500. Meaning, and we already, and we also told you must begin at 1,000. So multiples of 500 from 1,000 to 1,500. So you cannot now order 1,100. So you either order 1,000 or 1,500. So despite the general rule, you must also obey the specific guidelines given by the exam. Good. So here tumemaliza. The next one that I want to touch is still on the same paper, question 3B. Question 3B. Still on the same paper, question 3B, which reads that you have been appointed to head the management accounting department of XYZ Limited. The company is in the process of making a decision on pricing of one of its products. During the year 2014, XYZ sold 80,000 units, the price of 10. The total cost per unit was 6 bob, of which 4 was variable. Now for the year ending that 1st of December 2015, the following cost and demand estimates have been made. So we are given that. If XYZ Limited decides to maintain the current price, the variable and fixed costs are expected to vary as shown in note 2 above. Now, recommend the price that should be adopted by the company on the basis of profitability. So this question is pricing and also CVP. And on making the decision, we are going to use the expected values. And we are going to use the profits as the measure. So if we are going to use the profit as the measure, we know that profit is revenue minus what? Costs. So we must be able to get the revenues and the costs. And we also know that revenue is selling price multiplied by the units. So in this question, we already know the prices. There are 3 prices. There is the current price of 10, the proposed price of 14, the proposed price of 17. Those ones are already known. The next thing that we need to know are the units so that we have the revenue. The units at the price of 10, that one is known, they are 80,000. But the units at the price of 14, those ones are not known. As in, we don't have a single value. So we have to get the expected units. So that's namna hii. Tasema expected demand at the price of 14. Expected demand at 14. It is 42,000. You multiply by the probability of 0.2 plus 60,000 multiplied by the probability of 0.3 plus 65,000 multiplied by the probability of 0.5. 0.5. Mm-hmm. 58,900. 8,900. Then the expected demand at the price of 17. The expected demand at a price of 17 is that 5,000 times 0.2 plus 55,000 times 0.3 plus 62,000 times 0.5. $54,500. So as at that point now, we can be able to get our revenue, because we know the prices, now we also know the units. Now we need to know the costs. We know costs are made up of two. There is the variable and the fixed. Now the variable, we are told it is going to change. So we must now get the expected V. The expected V. And the expected V, you can see there is a likelihood of 5 with a probability of 0.2. There is a likelihood of 4.5 with a probability of 0.3. There is a likelihood of 4 with 0.5 chance. Hmm? 4.34. 35. 4.35. So that is the variable cost per unit. Now we look for the fixed costs. And when we go looking for the fixed cost, we realize it is also likely to change with some percentages. So the expected increase, the expected fixed cost increase, the expected fixed cost increase, it can go up by 40% with a chance of 0.2. It can go up by 25% with a chance of 0.3. It can also go up by 10% with a chance of 0.5. The chance of 0.5. Huh? 20.5%. So with that now, right now, fixed cost is how much? According to information 1, we are told the total cost per unit was 6, of which 4 was variable. So the current fixed cost will be 6 minus 4. So multiplied by the actual number of units that were sold then. That gives us 160,000. So the new fixed cost will be 160,000 plus tunaambiwa it can go up by 20%. Let me put it that way. One. So when you are told to advise someone, that someone has options. Yeah, has options. So the first thing is to know the options. So the options that are available, they are the prices. They are the prices in shillings. Then you must know what we call, I should have separated. When you're advising a person, you must know what we will call, or we call, the decision criteria. Decision criteria is the characteristic that you look for. This 20.5 out of 100 is coming from here. Because we have been told that we are increasing by this percentage, so we have computed to compare the average. So you must get 20.5 of 160. You get the increase. Is that okay? Okay. So I'm saying, when you're advising a person, you must know the decision criteria. Decision criteria is the character that you shall look for in the options for you to tell, okay, good. For you to tell the person, this is the way or this is not the way. And earlier on, I had already said we are going to use what we call the expected what? Profit. Actually, even the question suggests that on the basis of profitability, you advise. So how do we get the profit? The expected profit we know so well is contribution margin, X minus F, and you get pi. Yes, CVP. No, that's why they say teaching is a call. Although I've never been called, guys came to akiniita. Kama niliitwa sikuitika. Nilijiita, not very sure nilijiita. I've been seriously looking for something else to do. I don't know whether I would get. Or I continue teaching. Hiyo ndio kuitwa. Hiyo kosa kitu kingine tena confirm kuitwa. Haya basi tuendelee. Haya. Sasa I was saying the formula hiyo tunajua vizuri kabisa ya CVP. Na kama hutaki hii, then utumie ile ya kawaida. Total revenue minus total cost. total revenue minus total cost. Sasa, at a price of 10, at a price of 10, at a price of 10, contribution margin will be 10 minus the variable cost of 4.35 multiplied by the units. The unit at 10 is 8,000. You can actually ignore the fixed costs if you remember decision making, because the fixed cost will be common everywhere, so it is irrelevant. But again, to avoid some people not getting what I'm saying, let me put everything 192,800. But you could still avoid it. It's irrelevant. $259,200. At a price of 14, at a price of 14, takuja useme 14 minus 4.35. The units at 14 tulipata 58,900. The fixed cost is 192,800. $192,800. 555. 585. At a price of 17, it is going to be 17 minus 4.35. With 54,500 minus 192,800. That's about 1,496,625. So obviously you go for the highest. So the advice is that they should charge 17 shillings per unit. What to my so I recommend the price. So the advice is that the selling price should be set at 17. Break-even number of units, XBE, we also know so well, it is F out of contribution margin. So F is 192,800. Contribution margin at the price that we have recommended is 17 minus 4.35. Minus 4.35. So you have the answer. Okay, the next question is November 2015, question 4B. November 2015, question 4B. If the question was solved in class, let me know. November 2015, question 4B. Is it solved in class? No. So then we can solve. It says that the following data relate to the operations of division X of Pedro Limited: selling price per unit, variable cost per unit, fixed cost per year, investments. Y Limited has placed a special order of 10,000 units per year from Pedro Limited. The firm has requested for special price. The current volume of production is 43,000 units. Accepting the special order will increase fixed cost by 90,000 and investment by shillings 240,000. So you are required to get the number of units to be sold to achieve a return on investment of 25% without the special order. So the first thing is to tell us, how do we get return on investment? Return on investment, it is given as what? Income. You divide by what? Huh? The assets or capital multiplied by what? 100. That's the formula of getting return on investment. So how do we get income? Income, we know again, is revenue minus what? Minus costs. That's like we have done with the other one. So now that you are CPP, let me use the total approach for this one, where I will say the selling price is what? 90. And the number of units that are sold without the special order, according to information 2, they are 43,000. Minus the variable cost. The variable cost per unit is what? 54 times the 43,000. 43,000 as the variable cost. Then you minus the fixed cost. The fixed cost is currently what? 900,000. 900,000. So work out that. Hmm? 648,000. That is the income. And therefore, return on investment should be 648,000. The assets or the investment is currently 2.7. Multiplied by 100. %. 24%. The next, the return on investment without swali hapo kuna makosa. Karatasi yako inasoma nini? No. In November 2015, eh? Actually, the first one ilikuwa inauliza Oh. Sasa yako number 2 inauliza na number 1 was so mimi ndio nimesoma the wrong one. So sasa hiyo tumejibu So we already have answered number 2. Without the special order, the return on investment is here. Higher. Then let's now get to know the number of units without the special order. The number of units. So let X to be the number of units. Number of units. If we let X to be the number of units, then income. Actually, hata hiyo ni nzuri imetusaidia because now we start from the node to unknown. Sasa hapa itakuja niseme 90x because that's 43, ndio? Then hapa niseme minus 54x minus hiyo hata ni nzuri sana. That's why we are told a good book that all things work for good. So 90 minus 54, when you are putting like terms together, 36x minus 900. So that is our income. So if that is our income, ukikuja hapa now, I will say that 6x minus 900,000 you divide by 2.7 times 100 should be equal to 25. The last lesson. So that 6x minus 900,000 multiplied by 100 should be equal to 25 times 2.7 million. 2.7 million. So tunaendelea tupate that 6x minus 900,000 is equal to 25 times 2.7 million, which is divided by what? 100. Which is divided by 100. Niendelee niseme that 6x minus 900,000 equals, now give me this answer, 675,000. So that 6x equals 675,000 plus 900,000. And therefore x should be 1575,000. You divide by what? 36. Sasa hiyo inakuwa 43,750 units. 43,750 units. Then you are told the lowest price at which Pedro Limited could sell the additional 10,000 without reducing the return on investment. So we want the lowest price and still get the what? 24%. So 24%. So to handle that, to handle that, we will say, let B to be the lowest price. The lowest price. Sasa, we are going to sell the 10,000. So are we still going to sell our 43,000?
Yes.
Are we going to sell our 43? Yes. And when we sell our 43, the income will be zero. So I can argue like this. Additional income. Additional income should be the price which we do not know. Let me not use the factorization here. Should be the revenue. The revenue will be 10,000 P. The revenue will be 10,000 P minus these 10,000 units. Each one of them will incur a cost of what? 54. And after we are told they will also incur an additional fixed cost of what? 90,000. So this becomes 10,000 P. Tell me what this one is. Hmm? 450 minus 450,000. So that is the income that we expect to get from the new order. The income that we expect to get from the new order. Total income. Total income should be the current income that we had, which is 648. Sio ndio ilikuwa imetokana na the 43. Plus hii ingine tunatengeneza 10,000 B minus 450,000. So when you combine them, unabaki na what? This 648 minus 450. 198,000 plus 10,000 P. That is the income. So this 198,000 plus 10,000 P, or before I okay, so you divide by the new investment. The current investment is 2.7 billion, but we are going to bring a new investment of 240. So this one, you multiply by 100, you get the current one, which is the new, or rather the current return on investment, 24. So this one will be 198,000 plus 10,000 P should be equal to 24 times this one. When you add 2940, 24 times 2940, you divide by 100. It is exactly the same thing that we have done there. So straight on, P should be 24 times 29,400 minus 198,000. All these you divide by 10,000. So I've summarized the steps that we have taken here. $50.7, is it 50? I was not expecting 50. 50, yeah? I was expecting a 68 something. Iko sawa? Yaani kuna mahali tutakosea. Hii swali nimesolve for wrong. Because we are dealing with the addition. They're just dealing with the special order. The 900 that would make the 990 is already captured for 648. It's already captured up. So you are saying this is 50.76. Wewe unapata 68. Miaka mingi tunapata 68. Sasa tunajua 68.76. Anyway, hakuna time. Naona hata watu waone wakisema ni that is in 540,090. So 10 148 plus 10p 4. Oh, we have been working with 940. Haya, so kama ni 50, I can see people giving 50. 940. So then we can take 50.76. Most of us we are getting that. Don't have a lot of time now. It's exactly 8. Good. Now there is one more question that I wanted, but time measure. May 2019, question 5A. May 2019, question 5A. May 2019, question 5A. Tumelisoma balance scorecard, Mr. Karua.
Yes.
Balance scorecard. I say my yes. I have another person saying it is 68.76. Even me for wrong have solved this question and Kapata. So because of the interest of time, I think kila mtu atakaa na konayo sasa. But this is the answer I've gotten for wrong. Say 450 minus 90. Anyway, wacha tumalizie hii. Bora tumepanga vizuri. Yeah, Karo is giving us the 540. Oh, yeah. Makosa iko hapa. Iko hapa. Iko hapa. Hii ilikuwa namna hii. This is the fixed cost namna hii. So this one should have been 600 and so the cost is not 450. Good, thank you, Karo. So the correct answer is this one. So Namari should not be that. Now it's already 2 minutes past. I wanted to just point out that this question. You are telling I repeat the sequence. Question 5A. I was asking, you have done balanced scorecard. Huh? Yes, you know the 4 perspectives. The finance, the customer, the business processes, and the what? The development. So if you know, it is very simple. It's very simple. Go straight to the table of percentages. Are you there? These are some of the very simple questions. You are supposed to simply check like now the first one, the percentage of staff promoted. You are there. In the budget, we thought we could promote 6%, but we promoted 30%. That was a good performance. Second year, we thought we could promote 30%. We only promoted 5%. That is very poor. Third year, we thought we could promote 30%. We ended up promoting 8%. So overall, what can you say? Is that a good performance as far as the staff promotion was concerned? No. Yeah. Just making a comment like that. It's that simple. Ukikuja kwa average lead time. Lead time, we thought in the first year, the budget is 3 days, but we achieved 3 days. That was good. You were able to achieve the target. But come the second year, we now achieved 3.25. So that was a bit worse. Going the third year, we even deteriorated to 4.1. So that is also not a good performance. It's not good. Ukiangalia sales turnover, we thought first year we would make 208, but we ended up making what? 200. We were below the target. Second year, we thought we could make 210. But you can see even what happened in the actual, we even went down to 192 from 200. And then we went further down to 169. So that was a very poor performance. Ukikuja kwa royalty points that are awarded to customers, kama hizi kinabonga points, hizi tunapeagwa kwa supermarket, tunasikianga hii maneno ya card, those points. So they thought they would give 1.5 throughout, but they gave 1.4 first year, second year 1.3, third year 1.2. So you can see they are not doing good. And that could be a result of even the sales turnover, which we have seen is also declining. Then kuja kwa number of staff grievances. According to their budget, they thought no one would complain, which is not practical. People will always complain. But now the actual was 47. Second year ikaongezeka to 101. Third year ikafika 123. And that could be attributed to the staff promotion. Yeah, that could be a reason why these grievances are increasing. Operating expenses. We thought we could operate with 180, then 182 and 185. But what happened? We went above, tukapata 190, then tukasoka kwa 196, then tukaenda kwa 199. So that is not very good. Customer satisfaction. We thought we could operate at 95%, but you can see what is happening. 78, tukateremuka 63, tukateremuka 50. 9. So that was poor performance. Processing time, we thought we could be taking 1 week to process what the customers require. But sasa unaona 2 weeks, 3 weeks, 3 weeks. So we are doing poorly. So ukipata swali kama hii, that is the first thing to comment on the direction. Are we doing better or we are doing worse? Then they would also require you to classify into the 4 perspectives. I've said come on the balance scorecard. There are 4 perspectives. There is the finance, there is the business, there is the development, and the customer. So you should be able to classify those ones. Now I don't have a lot of time to do that, but it's a theory question, and that's how we're supposed to approach it. So that is good, and we call it a day at that point. There are some videos that I have uploaded. Mudhoni have said the last one was not good. Which factor? Just check the balance scorecard. Just check the balance scorecard. It has 4 perspectives, please. Because time is gone. So I'm saying I've uploaded all the revision I think I've done, especially with the day class in my YouTube channel. So you can get all those, including some questions that we have not done. You peruse through them, and that would be good. So I take this opportunity to wish you the very best in the exams. And in as much as time is gone, let me say this, that what we have not done, any question that we have not attempted, don't touch it. Just now go and revise what we have revised together. If you start touching those questions that we have not touched, you will start seeing stars. And when you start seeing stars, and when you now build that fear, you go to the exam room, a person is already defeated, and you will not perform well. But when you attempt what we already have done, unaanza kujifanyia, unarudia, unaona unapata the solutions, you build confidence and you go to the exam room already a winner. So don't attempt anything that we have not done. Hii maneno ya watu kuleta maswali, unaambiwa hawa waliambiwa hii ni leakage, hiyo ni porojo. Don't go looking for what they were told by their teacher. Mwalimu wako alikuwa Kimani. Ile nimekuambia hiyo ndio imetosha. Unaelewana? So don't go looking for any new things. Just focus on what you have done. Make sure you are not overdoing anything. Too much of anything is what? It's poisonous. Just be moderate. Just relax. And above all, involve God. He will see you through. So thank you so much. Hope to see you next year. Those who have not done Sec 6 in our Section 6 class. And those who are combining, make sure you refer very many students to us. Thank you so much. God bless you. Yes, Mudhoni, I can see that. Thank you so much. Even this one, I will upload it in case you have missed something. You'll find it there. And when you get there, make sure you